Next on our agenda is the property insurance crisis. I am going to turn it over to Senator Geller. I think at least for the download meeting that we had building up to this meeting, I'm not an insurance guy person. I don't understand the system, but the guy to my left, your right, certainly does. And so I expect it to be a very robust conversation, certainly informative, and hopefully with everything we do today, we come out with some consensus ideas that we can send on to Senator Harrell and others to work on our behalf next session. With that, Senator Geller.
Thank you, Chair Smith. I have, as Chair Smith said, I do have pretty good background in insurance. I served on the insurance committees for 18 of the 20 years I was in the Florida legislature, House and Senate, and I was the national president of the National Conference of Insurance Legislators. So as a county commissioner, I get tons of calls on property insurance, not really much we can do about it. But there are things we think that can be done at the state and particularly the federal level. Reinsurance seems to be one of the biggest topics that I think we'll be discussing today. What the plan is to initially introduce, well, I see we have 4 people here. We're still missing Congressman Moskowitz, to have 3 people talk initially on the problem, but everyone can chime in, and then 3 people on the solution. But again, all of the panelists can chime in. Let me begin by just very quickly introducing our speakers, and I have that here somewhere, right here. First, we'll be going from left to right. First, we have Paul Handerhan, who has all of these initials after his name: MBA, CPCU, ARE, AIAF, and ARF, but that's just barking. Paul has a lengthy resume, but is here today as president of Federal Association for Insurance Reform. Then we'll be hearing from Stacy Galante. Stacy, I'm sure, JD. Stacy is the general counsel, chief legal officer for Florida Peninsula Insurance Company. Representative Cassell is an expert in this. She's on the second panel, but as an attorney has dealt extensively with insurance issues and has a great understanding of this. And finally, Mel Montaigne, another CPCU, ARM, CRIS, and again, ARF, if you have a dog. And he's president of Fair Insurance Rates for Monroe County. So we'll hear for a couple of minutes from each of them in that order, and then we'll have a panel discussion. Paul, you're up.
First, I'd like to thank Chair. There you go. I'd like to thank Chair Smith, Chair Geller, members of the Regional Planning Council for having me today. My name's Paul Handerhan. I'm the president of FAIR, which is the Federal Association of Insurance Reform. We're an insurance trade group, nonpartisan, nonprofit. We really look to create a robust and competitive insurance environment in the state of Florida.
If I can briefly interrupt, FAIR is one of the few groups that is seen as the honest broker. They have insurance companies who I think are the majority of their membership. They also have trial lawyers, they have public adjusters. It is widely seen in Tallahassee as the FAIR group. Ha ha ha.
Thank you. Pun intended. So when you really think about the genesis of the insurance crisis in the state of Florida, it's really kind of cyclical. And you have to really go back, I would say, probably to Hurricane Andrew. So many of you probably remember when Hurricane Andrew hit Miami. Very devastating on our community. What also happened subsequent of that is we lost a number of insurance companies to insolvency. We had some national carriers that wanted retreating from the state because of the exposure. And then we saw reinsurance capacity being restricted at that time. The legislature stepped in. They created the Florida Hurricane Catastrophe Fund to provide some additional reinsurance capacity. And then the market started to get back on its feet. We started to have more domestic primary insurance companies come to the state of Florida to fill that gap. And then things were operating well for a while. We had our residual market was created into the Citizens Property Insurance Corporation. And then we had a period of stability. And then we got hit with 2004 and 2005, where we had 8 hurricanes that crisscrossed the state of Florida. And again, we ran into a situation where we had a number of insolvencies, reinsurance capacity got contracted again, and the legislature stepped in and came with a number of reforms to stabilize the market, one of which was kind of creating this glide path to protect consumers from rate shock. And they had like a 10% glide path, which was supposed to really only be temporary. And then at a certain point, citizens' rates would get to an adequate level. We then got to another period of stability. The legislature created some financial incentives to bring new risk capital to the state of Florida. And then fast forward, we get to 2017, 2018, where we have, again, more hurricanes hitting the state of Florida. And then we also have, in addition to the weather risk that we experienced in 2007 and 2018, kind of a man-made exposure where we had social inflation, contractor fraud, a number of things that converged all at the same time that precipitated another 10 companies going insolvent shortly thereafter. Again, that crisis, the legislature stepped in. I think they've done an excellent job as far as getting the fraud out of the system. But this is an evolving industry. There's always things to work on. And there's still a number of issues out there that are driving costs. So probably for you and all your constituents, the biggest thing that they're concerned about is when they go to the mailbox and they see their bill, and every year they're getting these rate increases, and they don't understand when the legislature keeps passing reforms, why the rates still keep going up. So I think just a brief explanation on maybe why that's happening would be beneficial for you and your constituents. The work that the legislature has done is driving down the severity and the frequency of the fraud and some of the stuff that should not be in the system. Unfortunately, in the same time, we've experienced more severe weather events within our state of Florida. They call them severe convective storms. And just to give you an example, back in 2000, the value of severe convective storms, this is across the country, was sub $100 billion. Fast forward to today, severe convective storms are costing upwards of $600 billion. So that's a massive increase in cost. And of course, that cost, whether it's being borne by reinsurers or primary insurers, winds up trickling down to policyholders, and that's a big driver. Secondarily, we kind of talked about citizens and this glide path. If you can believe it, the glide path that was supposed to be temporary that they implemented in 2005, Citizens still has not gotten to an adequate rate because the increases in the private market versus the glide path have never eclipsed. So what's happened is Citizens, as our residual market mechanism in the state of Florida, is charging inadequate rates. Now, if you're a policyholder and you're with Citizens and you're getting a subsidized rate, you want it, right? You don't want to have to go to the private market and pay more for insurance when rates are already going up. So I'm empathetic and I understand that. The problem winds up being is Citizens has, a competitive advantage over the private market. That's business that the private market would normally underwrite if the price was at an adequate rate. So, one of the big things that I see as kind of the elephant in the room is we have this state public entity that's competing with our private market where it shouldn't be. It's a difficult conversation because nobody wants to have their rates go up, but it's something certainly that needs to be addressed. So lastly, before I turn it on, I'm just going to give you like 4 pillars that are driving rates. We talked about it briefly. You have more severe convective storms, more severe events that are happening. That's due to weather patterns, regardless of why you think it's happening. If you talk to all the reinsurers, the insurers, the scientists that are tracking this, there's no doubt it's happening and it's having an impact. Secondarily, if you look at the state of Florida, I often say we live on a sponge because of our coral bed on a peninsula in the middle of a wind tunnel, right? So Senator Harrell had referenced, we're in a very high risk exposure region, so much so we're like one of the highest risk exposure regions in the world, just not in the country. So that's having an impact. And then our population growth. We have almost 1,000 people moving to Florida every single day. So you have a lot of people moving into very high risk exposure areas that are having an impact. And then I would say inflation. So inflation is having an impact on the cost of insurance. I'll just tell you a quick anecdotal story. I heard from a contractor the other day who said, I remember 20 years ago when I used to do a remodel for a bathroom that would cost $5,000 or $6,000. You go to have that same bathroom renovated today, and you're looking at $25,000, $30,000, $40,000 for these type of renovation projects. And a lot of that is tied to inflation. These are macroeconomic things that are being put into the system, but certainly they have to be borne and have to be paid because there's no free cost of capital. So I'll kind of pause there and I'll turn it over to Stacy Galante.
And before you do, I would like to welcome Senator Rene Garcia, now Miami-Dade County Commissioner, all around good guy, one of my favorite people. And also Congressman Moskowitz has joined us. And Congressman, we'll skip over you for now to give you a chance to get settled. We'll go over to, again, General Counsel for Peninsula Insurance, Stacy Galante, another all around good guy.
Thank you very much. Well, that remains to be seen, but thank you. Appreciate it. Again, I'm Stacy Galante. I'm Chief Legal Officer, one of the co-founders of Florida Peninsula Insurance Company. We also have Edison Insurance Company, which we took over in 2010. And I think now we're in the top 5 insurance companies in the state of Florida for property insurance. And we write residential homes, condo units, renters, dwelling policies, which are landlord policies, things of that nature. And we've been in business. I believe this is either our 19th or 20th year. And we've survived all the various storms. Actually, the year we started, 2005, that was the year of 4 storms with Hurricane Wilma, et cetera. And we're still here today. I think Paul Handerhan took a lot of my fire out because he did hit it. What I like to say is there are things we can control and there are things we can't control. We can't control inflation and printing of money. We can't stop people from moving into Florida. The supply chain issues from the pandemic, the increase in construction costs of materials on average up 30% since 2020. Things like drywall and steel up in the 20-something percentage. Increase in labor costs. Again, the global weather changes that Mr. Handerhan mentioned, reinsurance costs, which are part of the same inputs that go into that. My mentor said that insurance pays for real things. So we pay for drywall, we pay for roofing materials, we pay for actual items, and that costs money. And so when those go up post-pandemic or because of inflation and supply chain issues, that has to be reflected in the rates. There's just no way to get around that. There's no magic pot of money sitting somewhere to help us. It's just basic economics. And so those are things we just can't control. And there are some other things that Mr. Handerhan didn't point out, things like the catastrophe models. So reinsurance and insurance companies charge part of their rates on catastrophe models, which are pretty accurate, pretty darn accurate. But they modify them over time. And as they do, sometimes those inputs go up as well, right? Especially if there are more storms or the storms are more severe or if more people have moved to Florida, which we all know from the traffic, and there's more people in this area and there's more damage that's going to be paid out. And so those types of issues we can't necessarily put our finger on and control. I will say, since you asked about the problems, those are the problems. And there are items that we can control that we should try to control. And I think the legislature and the governor did a very good job in the state of Florida over the last 2 or 3 years in trying to resolve some of those problems. And so, just in terms of some of the positives, if I may, Chairman, in 2017, I was at a insurance summit just the last couple of days in Orlando. And even Citizens in 2017, 21% of their claims ended up in lawsuit, 21%, and now it's down to 8%. That was in 2023, and it's down more. That's a 60% drop in that. Citizens takeouts, companies are coming back to the market because of some of the laws that were changed. And 661,000 citizen takeouts, that's where private companies take the policies from the market of last resort. and 350,000 takeouts in 2024 so far. That's $113 billion in exposure that has gone from the state, from the taxpayers, to private companies that are now backing those risks. That's terrific. That is something that we haven't seen in a long time. Reinsurers are excited. They're coming back to the state. There's more capacity. You're going to find a lot of insurance companies putting in rate decreases, stable rate, or even at the most single-digit increases, again, for the most part. Of course, it varies by territory, but on average, you've seen lawsuits drop. You've seen claims drop. You've got new carriers entering the market. I think it's 6 new companies have entered the market. A few of them are already starting to write. You've got inflation stabilizing. Again, not something we necessarily control, but it certainly helps out. So there's a lot of positives in this market. And I wanted to point that out because we are suffering from all of the storms and those kinds of things and an increase in costs. But there are a lot of great news, thanks to a lot of the people in this room.
Thank you, Stacy. Let me now call on Mel Montaigne from Firm.
Good morning. Thank you very much for the invite, specifically Michelle Lincoln for allowing me to be here. I guess I'm going to have a very different take from the 2 prior folks, industry and company. Monroe County has been fighting this windstorm issue for 52 years, believe it or not. Monroe County was the genesis of the Florida Windstorm Underwriting Association, begun in 1972. Fast forward, it is what is Citizens today. We were not a part of any of the fraudulent activity that occurred with Citizens and the reason for their astronomical losses. As a matter of fact, Monroe County has been a profit center for Citizens for the last 22 years to the tune of about $50 million a year. So it's very difficult for us to continue to stomach the rate increases that we are seeing. Not only the rate increases that we are seeing, but this new flood insurance requirement that is in some cases more than tripling the insurance cost to our community. A lot of people are now dropping insurance altogether, which is, I think, kind of the opposite effect that our legislators intended, but that is happening today. The other thing, again, our legislators had great intentions, eliminating the AOB, the one-way attorney's fees. My one critique would be, why was nothing asked of industry, right? So we gave industry all of these things to return them to a profitable status, but yet we asked for nothing in return. So today we are basically leaving it up to industry to factor these things in, to continue to tell us the rates are inadequate. Now, whether the rates are inadequate or adequate or will be adequate, I don't know. The one thing I can tell you, apart from being the president of Firm for the last 10 years, I've been an insurance agent in Monroe County for the last 25 years. The changes that we have seen in Monroe County have been drastic from a premium standpoint, from an affordability standpoint. And the interesting thing is, if you look at the statute that enabled Citizens, within that first paragraph, affordable is mentioned 6 different times. Again, I'm not an actuary. All that you hear when you speak to the folks as Citizens, as I have and testified at their rate hearings, is we need to get actuarially sound rates. And that's fine. And I agree with that. But now we are also facing an additional surcharge of up to 50% rate increase for people that don't have a primary home in Monroe County. So is that 50% surcharge now actuarially sound rates? Is that going to get us to actually sound rates? I don't know, because the answer hasn't come back. We had the folks from Citizens down in Monroe County, took them through various projects that we have ongoing for Habitat for Humanity, and pointing out to them that those folks in those affordable housing situations can no longer afford insurance. So what is happening? Those folks qualify for those homes under very tight economic guidelines. When they are taken out of those guidelines by insurance, Habitat for Humanity now has to step in and pay for that. So part of what we were looking for this past legislative session, which we did not get, was a return to the 10% glide path, doing away with flood insurance requirements in X zones, which, believe it or not, we do have some in Monroe County, and eliminating the flood insurance requirements for homes that are 1 foot above the base flood elevation. And that would help out the Habitat for Humanities and the other people that are doing workforce housing. So I guess we are all looking for some kind of solution to the citizens' problem. One solution that I would present, and remember, Citizens writes about 95% of all policies in Monroe County. I don't say that proudly. That's just the reality of the situation. So we need a solution to the citizens' problem. Part of what I have testified again to Citizens, they should get out of the multi-peril product. That's what got them into the issues that they face with their huge underwriting losses, and stick to what you know, stick to wind. That's why you were created. Why you got off on this tangent of writing multi-peril policies, I have no idea, but that would be one solution that I would present to Citizens.
Thank you, sir. And you've raised an important issue that we all know about, the problem with unaffordability of housing in Florida. One of the major components of that is insurance rates. Statewide average is $6,000. It's gone up by 68% in the last 2 years. And if that's a statewide average in areas in Southeast Florida and coastal counties, it's got to be more than that. I'm going to ask if either of our electeds would like to comment now. And first, I would like to say I was going to ask Congressman, there's only one elected official in the room that represents both the SFRPC and the TCRPC, because Congressman Moskowitz represents both Broward and Palm Beach counties. So Congressman, did you have any remarks? And I hope you'll be able to stay for the later, or do you want to yield to Representative Casale first? Okay. Representative Casale, you're recognized, ma'am.
Thank you. And thank you, Congressman. I wish I would have gotten what you just said to me on record. So I appreciate the compliment. It's truly an honor to be here. Just to give you a little bit about my background, I've been a practicing attorney for the past 18 years. 15 of those years, I've specialized in property insurance, having represented pretty much every insurance company in the world, from Lloyd's of London, QBE, large international carriers down to Citizens. And I've had the honor and privilege of representing policyholders across the state for about 10 years in their greatest time of need. And recognizing that this conversation is extremely complicated, I knew that I needed to get engaged in the legislative process and started a consumer advocacy group where I engaged with legislators prior to becoming an elected to talk about this problem, because it's extremely complicated. And we've been in this crisis to some extent since 1992. Just to kind of talk about and highlight some of the things that have been mentioned, I fall along the lines of Mel, where, while reforms have been passed, what have we gained as a result of those reforms? Many of the reforms that we have passed really were anti-consumer. They were really the industry's talking points and wish list for the last 10 years that were really given to them during the special session in 2022. And we've seen no relief as a result of that. While I do agree that litigation was a problem, it was something that we were willing to address and definitely discussed. We see that it was not the only problem. And I think the fact that we spent so much time focusing solely on litigation, we really took our eye off a lot of the bigger problems that we face as a state, primarily reinsurance. Reinsurance is 40, they're 40 to 50% of what a consumer pays in their premium. And we rely so heavily on the global reinsurance market that is unregulated, that we have no oversight over and don't have the ability to, determine cost. We're told what that cost is. And one of the problems, Stacy mentioned a lot of the positives, but about businesses and new companies coming into the state of Florida, but they actually really concern me, because when we look at the types of companies that went insolvent after the 2004, 2005, and then really, 2017, we've seen about 11 companies go insolvent. History is a great way of repeating itself. And we have a lot of historical information about how those companies got started and what forced them to go insolvent. And really, all we're doing with the reforms that we've passed are inviting those same types of companies in. We are inviting companies to come to the state of Florida that are, sort of fly by the night, are undercapitalized because we do not require them to have a large capital. They rely heavily on the reinsurance market. And the way I talk to it with my constituents is you have to think about reinsurance like airlines. We know airlines oversell the tickets that they have on a particular flight. Well, that's what insurance companies do that are undercapitalized and are relying on reinsurance to pay their bills. They oversell, they write too many policies, and then when the claims hit, they have to rely on the reinsurance market to pay for that. And so when you're undercapitalized and relying on a reinsurance market, consumers are going to feel that in their pocket. So as long as we allow those types of companies to continue to come into the marketplace, we're just repeating history. So the fact that we have 6 new companies coming in, I don't see that as a positive, because I really do think we're just creating the same problem that we find ourselves in today. And additionally, one of the things we haven't really talked about is our condominium crisis. Of those 6 new companies that have come in, only one of them writes condos. The majority of condominium policies is written by Citizens. And when we also talk about the takeout companies, they're taking out the best policies from Citizens. They're taking out the policies that really, at the end of the day, don't alleviate our risk and don't alleviate our risk as Floridians. They're taking them out in the best zip codes, furthest away from the water, built today with the highest building code standards. And what still falls on the back of Floridians is going to be those areas in the highest risk and that are the most vulnerable. So we're not really going to see any benefit by these takeout companies, because they're not helping us alleviate the risk that falls on the back of Floridians. So that's just an opportunity. And we talked about actuarially sound rates. One of the things we haven't talked about with Citizens is I don't think we're ever going to get there. Citizens doesn't have the same requirements as a Florida Peninsula and an Edison when it comes to reinsurance. They aren't required to carry the same level of reinsurance, which is the costly part of that, of the price tag for a premium. So how do you expect, a state-backed insurance company that has the ability to utilize state funds and bonds, and because of their backing from the state of Florida and their financial soundness, their cost of reinsurance already is never going to be what the cost of a private insurance company is. So we have this idea that we want Citizens to get to this actuarially sound rate, but it's not really feasible because you can't compare apples to oranges. So we have this goal that I don't think is actually obtainable in light of the fact that we are comparing 2 totally different products. So I know I'm here to talk about solutions. I'll do that in the future,
next
but thank you
panel.
for the time.
Which is the next panel. Congressman Moskowitz.
Good morning, thank you, or good afternoon by now, perhaps.
Still
First-
morning.
Almost there. First, I want to thank Senator Geller for spearheading a lot of this and drafting the legislation that I filed in Washington, D.C., not for me, actually, but for a predecessor in Congress, for Charlie Crist, who filed this in the previous Congress. In fact, when I got to Congress, this was one of the first bills that I filed. It's interesting, and I'll talk a little bit about the politics of this. I actually think this is going to be the issue in the next governor's race. whoever runs, whoever it is, Democrat or Republican, I think this is going to be the issue. About a year ago, my insurance company dropped me. I got a letter in the mail, like a lot of my constituents are getting. And the letter said, we are not going to renew your insurance due to hurricane exposure. And because I'm pretty sarcastic, I called my insurance company up and I said, when did you discover that I had hurricane exposure? And why are you just notifying me now? And of course, the lady didn't understand what I was saying. But by the way, that's what constituents of mine are getting. They're getting letters in the mail saying that their insurance is not being renewed because they have hurricane exposure. Of course, I've had the same hurricane exposure the year they insured me, the previous year they insured me, and the year before that, and the 10 years before that, the 15 or 20 or 30 years before that. And yet, that's what a lot of my constituents are seeing. You know, I fall somewhere in between the panelists and what I said to Representative Casales. You go first. You are the expert in this field, which she is. But I fall somewhere in between. Look, I think that, you know, Tallahassee had to respond because I think the pressure was on them. I think they accomplished what they've wanted to accomplish, which was to try to blame the trial lawyers. Okay, which they've done. You've done that now, right? You fired that bullet out of the chamber. It's gone. You can't continue to blame the trial lawyers, right? And it's kind of bringing a knife to a gunfight, right? They've done that. It's finished, right? But meanwhile, costs are still going up, right? It's great that new companies are coming in, but it's not necessarily at this moment showing that that competition is lowering rates. And the biggest issue I have in my area is it's not just individuals that are soon not going to be able to afford their home insurance. It's the condos and it's the associations. I mean, you go to Kings Point or Palm Air or John Knox Village, and Sam Gorin may know this because he may represent some of these folks. I mean, their insurance is doubling and tripling. Okay, well, when you're on a fixed income, right, the people who live in there and Social Security, and their community center insurance goes from $250,000 to $750,000, right, and it's $500,000 more, they just can't go to the people who live there and say, hey, we have to increase your association fees. Okay, and so that's why this is going to become, in my opinion, the issue, the political issue in the state of Florida. The reason I filed the bill is because I really believe this is a national issue, and it will become a national issue. We are the tip of the spear. You're starting to see it moving in other states. And I really believe, just like FEMA, right, takes the burden off of public entities and governments, which was really what FEMA does. And I have a lot of experience with that coming from the disaster aspect. I think, and I'm not someone who believes the federal government can solve all problems and should be in all industries, but I do think the federal government needs to step up to ensure that these insurance companies and the reinsurance aren't just going out and getting this 1 in 1,000 year coverage driving up rates, or the 1 in 150 year coverage that's driving up rates. That's where, through using bonds, the federal government, without spending taxpayer money, can make sure that these insurance companies don't have risk of ruin, and shore up the market. I mean, listen, if medical insurance companies, if health insurance companies could get away with it, right, they would charge different rates if you had a pre-existing condition. They would. That's what they always wanted to do. Well, Florida has a pre-existing condition. We have hurricanes. California has a pre-existing condition. They have earthquakes. Tornado Alley has a pre-existing condition. They have tornadoes, right? There are floods in Kentucky or Iowa. All right. And so there are natural disasters all over the place. Those are pre-existing conditions. We have to amortize that as a nation, right? And so that's what I think this bill will do without it costing taxpayer money, without adding to the debt or the deficit. And so, you know, I think what Senator Geller has proposed, which is called the Natural Disaster Risk Reinsurance Program Act. I know I don't have like a fancy, like cool name for it. You know, we'll come up something that like poll tests well. But it's funny, I met with the insurance companies in DC, and many of them were against it, just like the health insurance companies were against, you know, Obamacare. But by the way, after Obamacare came into place, after all the insurance companies were against it, guess who's doing better than they were before Obamacare. All the insurance companies, they're doing better, right? They're doing the best they've ever been doing. And so again, I think this is going to be a conversation. I think this is something that we have to have private industry at the table with. But we cannot get ourselves into a situation where the default position is going to either people start not getting insurance or getting such inadequate insurance that it's almost like they don't have insurance. And so again, I want to thank everyone for coming. It's good to see Senator Garcia again. And thank you, Senator Geller, for inviting me here today. Appreciate it.
Thank you, Congressman. You all raised a bunch of questions, most of which I already had on my list. Let me go on the first one, something that Congressman Moskowitz touched on. By the way, first, I was elected to the legislature in '88, pre-Andrew, and the top item on the insurance company agenda was getting rid of attorney's fees. So that's been there for at least 35 years. They just followed the famous adage, never let a good crisis go to waste. But that's been their agenda for as long as I recall, and I go back through '88. A concern that I have is a lot of the ways that they are reducing premiums has also been by reducing coverage, and also with the attorney's fee provision, making it impractical in many ways to be able to litigate smaller suits. If you have a $50,000 lawsuit or an $80,000 lawsuit, you're probably not going to be able to get an attorney to handle it now. Can anyone on the panel, just raise your hand or just jump in on the diminution of coverage because they've started excluding things. They put in sublimits, 10,000 on floor or waters, things like that. I'm concerned that if you have an $80,000, if you have a $600,000 home, you can have 40, 30, 40, 50, 60,000 in damages and not get a penny because of deductibles and exclusions. Can you all discuss that, Hillary? I saw your hand, and then I saw Jared, and then just jump in.
Sure, happily. I mean, this is my day job, right? Getting the call from consumers who, are in their greatest time of need. It is their number one asset. It is most people's only asset. They have invested, they have worked their entire lives, they have paid their insurance premiums, and then they call, and then you have to explain to them, well, you don't have coverage for that. And that is one of the reasons why I got engaged in the legislative process, because it wasn't that I was only seeing, again, having represented insurance companies, you just continued to see this evolution of policies where consumers are paying the highest premiums across the country, but yet you have this complete reduction of coverage at the same time. And, you can't really it's not fair to have one without the other. If I'm going to pay the highest premium, I think everything should be covered. But it's definitely one of the things that brought to my attention and got me engaged in the legislative process. And I think that has a lot to do with the issues that we have with our Office of Insurance Regulation. For several years, we had an insurance commissioner that was willing to sort of rubber stamp many of the forms that insurance companies were presenting. So we started to see limitations on water damage coverage. We started to see limitations on mold coverage. Currently, there are statutes in place that basically say, listen, insurance company, if you insure continuous flooring, you've got to pay for continuous flooring. That's what I pay in my premium. And now we have policies that say I only have to pay up to 1% of the damaged area. So I've got consumers calling and with situations where they're not going to be able to actually fix what's been damaged because they can't fix the pieces that come with it. So, I think it's definitely something that needs to be looked at with more oversight. And I think, Mel, you mentioned we didn't really see any reforms to the insurance industry. And that's one of my biggest gripes when it comes to what the work that we've done in the legislature here in Florida is we've done so many sort of things to curb consumer access to the courts, but we haven't done anything to say to the insurance companies, well, you've got everything now. Let's make sure that these consumers are protected and have actual coverage. I mean, there's a lot of policies that consumers find out at the last minute that they don't actually have coverage for the losses that they suffer, and it's a big problem.
Thank you. Congressman.
Well, it's a great question. I'll give you a real life example. I did that when I renewed my insurance. Now I can afford writing the deductible, but I took mine from 25,000 to 100,000, right? But what people complained about in the health insurance space, right, which is they were eventually going bankrupt with their bills. The same thing will happen here over a period of years, because here's what will happen. People will start raising the deductible, which is the easiest way, because it doesn't affect them day to day, right? Oh, the day I was like, yeah, raise it from 25 to 100, I went on with my regular day, right? Nothing changed. The storm will come, or the event will happen, right? And all of a sudden they'll have a $100,000 deductible, or they'll have a $150,000 deductible, and they won't be able to make the payment, right? They won't be able to make the payment. And so if they don't make the payment, they'll then sell their house for less because it'll be damaged. So their number one investment will net them less money, okay? Or, quite frankly, they will make the payment and deplete their savings, right? Like people used to do, and still do in some cases, in healthcare. And that's where we're headed. We've seen this show before. And so I can tell you, Steve, from my own aspect, that's exactly what I did. Because when I got dropped, okay, versus going out and wanting the identical coverage, it was 35% more expensive. So look, because I can afford to write deductible, I'm hedging my bets and raised it. But there are people who are going to do the same because it's the instant thing that the agent proposes. Well, oh my God, my insurance is up 35%. What do you recommend? Well, you could raise the deductible. Oh, sure, let's just go ahead and do that. Yeah, raise the deductible, right? So I can keep my monthly payment the same. And so, that's why I think the bill that you drafted that I have filed, which would lower costs up to 25% by, shoring up the reinsurance, industry, allowing states to opt in, allow the federal government to sell these bonds, with low interest rates, only on the most extreme storms, only on the 150-year events, not the 1 in 25, not the 1 in 50, but on the 1 in 150 or the 1 in 1,000. And again, without any cost to the federal government. And so, this is coming, right? We're literally talking about hurricanes, which are fast moving storms. This is a slow moving hurricane that is right now over the state of Florida, just sitting there and churning until it's going to be catastrophic. And until, quite frankly, the only thing that will be able to fix it will be the federal government coming in and assisting the state of Florida.
Thank you. And I was also going to say, I was talking about not only deductible, but exclusions, that they're not covering fences or not covering pool cages, et cetera. I saw Paul and Stacy, were you going to comment? I think Mel wanted to comment. Paul?
I think we need to be careful when we're talking about a one-size-fits-all policy. Listen, if you want to mandate that everybody has the broadest coverage to make sure after a loss that they're going to be able to get their insurance funds to rebuild, you can do that, but there's a price tag to that. And you heard Mel earlier where they're mandating flood insurance for Monroe County. They don't want it. They don't want the state telling them that they have to buy this coverage. They want to be able to make that decision themselves. So yes, you want to make sure that people can rebuild after a storm, but there's a certain level of self-responsibility, okay? This is your home. This is your asset. When you're purchasing your insurance, you need to make certain determinations. The congressman made an educated decision that he's going to have a $100,000 deductible. He knows that. For me, what the concern is, I want to make sure that consumers, when they're making these decisions, that they are being educated by their agents about the policies that they're buying and how those policies are going to respond at the time of claim. I still do think there is a number of policyholders that go to their agent and they're shopping based upon price, right? Oh, this policy's cheaper, I'll take that one. and they're not really getting the insurance education to explain to them the differences between the policies. So I think we can do a better job on the education piece, but certainly you want to give consumers flexibility to buy the insurance that meets their needs. Not everybody has the same risk tolerance, and not everybody's as risk adverse as others. Some people may say, listen, I have capital, I'm willing to retain a certain amount of the risk, and I'll cede a portion of it. So just keep that in mind. You want to give people flexibility.
Thank you, Paul. Mel?
Being that guy that sits in front of you to explain kind of what Paul is talking about, consumers these days are just focused on price. So you can very well tell them, look, this company here has an actual cash value condition on your roof. So if your roof is older than 10 years of age and there is a storm, you will not get replacement value on the roof. And that's a huge deductible, huge deductible. Like the congressman says, people will come in and say, well, I have a 2% wind deductible. Now I want to go to 10%. And what does that look like premium wise? So you give them the premium wise, and then I tell them, you realize your deductible is now going up 5-fold. So the day there is a loss, your deductible will be $100,000. Yeah. I'm good with that. Let's go. So what happens? The storm comes. What do you mean I have $100,000 deductible? What do you mean Citizens is not going to pay me a penny? Because Citizens does not pay a percentage of loss. Citizens pays anything excess of the deductible. So yes, education is necessary. Insurance agents out there are speaking to their folks till they're blue in the face. But at the end of the day, it's purely driven by economics.
Yeah, and can
Of course.
I add one thing?
No.
So,
Okay.
fair enough. So let me also tell you how it works in a disaster. Okay, when a hurricane happens and it hits people who are either going to be underinsured, which there are people out there now, okay, or walk away, right? All we're doing is shifting that cost to the government. We're shifting that cost to the government because if you have an abandoned home, anyone who has worked in a city or a county, right, they have to condemn that property, okay? Eventually what happens is that home might get demoed, and if it gets demoed, obviously that gets paid for by FEMA to clean up the debris removal. Additionally, there are grant programs like the CDBG DR program, Community Development Block Grant Disaster Recovery Program, or the STEP program, which FEMA got rid of, but was used in Puerto Rico. Which happens is where the federal government comes in and fixes homes where people are underinsured. And so quite frankly, when the reason why, with all due respect to the gentleman next to me, the reason why, private industry is okay with this is because it just shifts the burden to government, right? I mean, and that's what I think the bill, Senator, is trying to prevent. What it's actually trying to do is it's trying to help private industry and not shift the burden to government by spending taxpayer money in either HUD programs or in FEMA programs. Because those programs are meant to help either public entities or the poorest among us. But now those programs are going to expand dramatically. And if anyone's paying attention, I don't know if you've been watching Congress lately, passing supplemental funding is not easy and is becoming more political. Just wait, people don't remember what happened when the Texas delegation voted against the Sandy Recovery and Reinvestment Act because they didn't want Democrats in New York and New Jersey to get federal dollars. And then just a couple of years later, those Democrats in New York and New Jersey remembered that Ted Cruz and Republicans did that in Texas. And then Harvey hit, right? Remember that? And then they wanted to deny Texas their supplemental funding. And so, we're asking government to step in and bail people out more if we don't get a hold of the insurance industry, a government that's becoming more political and more divided. And I'm telling you all right now, there is going to come a point in Congress, and I'm fighting against it because I'm the only former emergency management director in Congress who even understands how a lot of this works. There's going to come a point in Congress where a supplemental funding fails, right? There's going to come a point where a state needs supplemental disaster funding and Congress can't pass it. They can't get it through because someone is going to say, like just happened recently when they tried to pass the Israel supplemental bill, well, we're going to tie that with offsets. Okay. Well, that hasn't happened in disaster funding yet, but that's going to happen. It's going to get proposed that, okay, Hawaii needs a $6 billion supplemental fund. Okay. Well, if we're going to do that, we got to offset it from somewhere. And what happens is when those offsets get proposed, it will fail. And so this idea that the federal government is always going to be there to bail out a state in its time of need is not necessarily going to be true.
Unfortunately. I'm
Just
afraid you're
one
right.
follow-up comment,
Paul.
please. So I wasn't being critical of the congressman's legislation, and there's an important distinction between providing additional reinsurance capacity after an event and mandating every policyholder buy a certain level of coverage, which is what we were talking about previously. So just want to make that clarification. Again, at the end of the day, I hear Mel tell me he's an insurance agent and he's having conversations with policyholders and saying, you should really have a lower deductible. You should really buy more coverage. And they're saying no. And then the storm hits and then they're saying, I'm mad. It's hard for me to be sympathetic when they're being educated and they're making a decision, buying less coverage. And then ultimately I paid more coverage for my policy and I have the coverage. So again, I think there has to be a certain level of self-responsibility as well.
I agree on education because I think a lot of people that when they get a 10% deductible or 5%, they think it's 5% of the damages, not for 5% or 10% of the insured value. Stacy?
Yeah, I just wanted to jump in. First of all, just so, and because I've known you for over 3 decades. I've never defended an insurance company in my life. I was a policyholder lawyer for 12 years. I was a plaintiff's lawyer, just like Representative Cassell. So, but until I and a group of people started an insurance company so we could do the right thing, that's when I got involved in the insurance. So I didn't, I never worked for a big insurance company. I'm homegrown. I grew up in Hollywood, Florida. And so I understand exactly what we're talking about. And I'm a policyholder as well. But the point is, once I've been on, quote, this side, which I think is all of our side, I realized Mr. Hanrahan said there is a cost to doing things. We're happy to sell a policy that covers all of your water losses, all the roof being replaced, but there's a cost to that. And it's not just the cost that we have, it's the cost that the reinsurers charge us. It's the cost that the contractors charge us. And so there's an underlying economic reality that we have to make sure we understand. And so, to be honest with you, when I was on the, quote, other side, I didn't really get that. Being on this side, I understand that this is like any other business. It's like a grocery store. You got to sell a lot of groceries to make a little bit of money, and most of your money is getting paid out. In some years, you got to put money back in because you lose money. Same with the reinsurance companies. They made a lot of money last year, this year, but they lost, billions and billions of dollars previously because that's who backs up the domestic market in these cases. And so, you can always buy a policy that has more. And I looked, we have 1% of our policyholders have the 10% hurricane deductible. Everybody else almost has the 2%. I think there's a couple people with a 5%, but the vast majority have a 2%, which is the standard hurricane deductible. So, on a $300,000 house, that would be $6,000 as an example. The only other thing I wanted to push back a little bit on, and I have the utmost respect, obviously, for everybody on this panel. And I do work. No, I'm not going to push too hard. But I do think there was a little bit of pointing out that maybe that taking policies from citizens doesn't really help the taxpayers or the people of Florida. And I would disagree strongly with that, because even in the last 14 months, private companies have taken, like I said, $113 billion of risk off the books of citizens, which is off the taxpayers. And when there's an assessment, and I think we're still doing assessments now for all of the past storms, right? When there are assessments, it doesn't just go on homeowners, right? It's not just the citizens, people who got subsidized. It's every other homeowner's insurance. It's auto insurance, people who may not even own a home. It's pet insurance. What else is it? Renter's insurance. So there are other people who have to fund it because we're subsidizing certain people and citizens. So when private companies like ours take over, and we've taken over a lot of policies, and we also sell policies through a network of 2,500 agents, I think we're helping the state of Florida, because if there is some type of major tragedy, a major event, it's our money and our reinsurance company's money on the line. And so I say that as somebody who represented policyholders for a dozen years before I joined Florida Peninsula.
Representative
just
House, sir,
one
rebuttal
more
for
comment
60
there.
seconds. 60 seconds.
Sure, we are seeing policies being taken out by domestic companies, but these policies are not our highest risk. So when we talk about potential assessments that come after a catastrophic loss, the losses that are going to be claimed are going to be in the policies that are still on the backs of Citizens. So while yes, companies come in, actually there was a newspaper article that Citizens is back up. Even despite some depopulation, we're still seeing an increase in Citizens, but we have to look at the risk that's being taken away, and we're still in the highest risk, most vulnerable places. So we appreciate your efforts to depopulate, but you're not depopulating in the places that are actually going to impact a potential assessment in the future, because those aren't the ones that have the highest catastrophic risk loss.
Last one, Paul.
All right. So I think it's important to define the role of Citizens. Citizens is a residual market mechanism, meaning they're supposed to only have the risks that no one else wants, right? That's the ultimate goal. And every residual market mechanism around the country, that's how they operate. And typically they operate as the most expensive option. That's the goal. Right now, Citizens is really the insurer of preference versus last resort, because people are getting a subsidized rate. It's a problem. And let me just explain the economics. So Citizens has about $6 billion in surplus right now. If you have a category 4, category 5 storm hit Miami-Dade, you're talking about somewhere in the rounds of a $30 billion event. That means Citizens is going to have a deficit of $25 billion. And then they're going to turn around and they're going to assess every single policyholder in the state of Florida to make up that deficit. And that's on your auto policy, like Stacey said, a number of insurance policies that you're going to pay until that debt is paid off. And it could be for the next 10 or 15 years. That debt gets paid off in perpetuity till it's gone. It's a serious risk. So if there's a private option, you really shouldn't be in Citizens. So if somebody's coming and saying, listen, I'll take that risk, I'm in the private market, it should go to the private market. Now, the good news is we're seeing some of the numbers of the current depopulation program. Many of the private companies who are taking risks out of Citizens are actually giving rate decreases, right? So that's positive. And yes, those homes are more attractive, but that's okay. You want the most attractive policies out of Citizens in the private market. That's the best way that you can actually stabilize, our insurance market here in Florida. Thank you.
Mel.
Oh, thank you. I'll talk about assessments first. Yes, Citizens has the potential to assess every single policyholder in the state of Florida. However, when you have normal insurance companies, what I'll call other than Citizens, go bankrupt, you also have a FIGA assessment, which is assessed practically on every single policyholder here. So the assessment argument to me, I don't know if I agree with it entirely, because there are assessments on both ends. One of the things that I do want to bring up are the way rates are calculated here in the state of Florida. Most companies, Citizens being one of them, has to go and run catastrophe models. There are catastrophe models that are approved by the Florida Commission on Hurricane Loss Projection Methodology. Let me take a breath, because that's a huge word. All of the companies there, with the exception of one, the Florida Public Model, are black box technology, meaning you cannot see how the sausage is
Black
being made.
box model is run out of FIU.
Correct. The public model is run out of FIU. So there you can go in and see how the sausage is being made. The interesting thing is, though, most companies will not use the Florida public model. They go with the private models that you cannot see inside that black box. So my argument has always been, if you want to put restrictive endorsements, and I'll use the one about the roof, if you want to go and put on an actual cash value on a 10-year-old roof, how are you reflecting that in your rate? Because the base rate that is being calculated by these models is not taking that into effect. So where's the trade-off? Where is the rate reduction on that endorsement specifically?
By the way, we'll be going another couple minutes. Lunch is not yet ready. It's not, they're setting it up. Once it is, I'm going to ask the 5 panelists to please go first, and everybody to let the panelists go first so that they can come back and get ready. After which we'll ask the left side of the room, my left side, and then my right side after that, so that there's not a line. So panelists, that side, that side. Okay. What about the ability to enforce? Because that's the other issue I raised. Are you going to be able to get attorneys to pursue cases any longer?
It's going to be extremely challenging, and when we talk about the one-way attorney's fees, it really was meant to level that playing field. We know insurance companies, have deep pockets, have the ability to defend, have the ability, and there's a book written about it, Delay, Deny, Defend. So really the one-way attorney's fee, one way, I highly recommend reading it. But one of the ways that we really leveled that playing field was to create the one-way attorney's fee situation, which it's really important to note, one-way attorney's fees only kicked in if you prevailed, or if the insurance company, through settlement negotiations realized you were going to prevail. So the only way that I get paid is if I can establish that my client's claim was underpaid or wrongfully denied. And what we're going to see, and what I'm already seeing in my practice is, an insured suffers a loss, let's say it's $30,000, and the insurance company denies that claim. Now, I can look at it on paper and make the determination based on the language of the policy, whether it's wrong, and know that I have a good opportunity to sue. But at the end of the day, now that client, that consumer who needs every single penny of that $30,000 to fix their home has to pay me out of pocket in order to get what they are rightfully entitled to under the terms and conditions of the policy. So by removing that level of the playing field, we know insurance companies, and not all insurance companies, he actually runs a really great insurance company, but we know a lot of insurance companies know that consumers are going to be placed in this position. They have no incentive to do the right thing. And they know that a consumer, when calling an attorney, isn't going to be able to pay out of pocket for money that they're rightfully entitled to fix their house. So I think we're going to see a huge backlash in the event of a next storm where people are going to be denied. Their claims are going to be determined to be under deductible, and their only option is going to be to hire a lawyer, and they're not going to be able to.
Anyone else? Okay, Paul.
I guess I can touch on this a little bit. So, listen, is there a situation where consumers are now going to have to potentially pay a part of their indemnity for their attorney's fees? Yes, that's happening. What I found interesting, some of the data that we're getting back right now, in order to file a lawsuit against your insurance company, you have to file what's called a notice of intent to litigate, which means you have to give the insurance company notice. So that is being tracked as far as the frequency of those that are being filed, and then the number of those folks who are actually represented by an attorney through the nodal process. The data seems to show that policyholders are still being represented by attorneys, but that the cases are being resolved through the nodal process before it ever gets to litigation. So, I've heard that, some insurance companies are still paying some fees to the attorneys to get it resolved, although it's not required statutorily. Some are not, some are getting the fees directly from the policyholder, but those cases many times are not going into the judicial system. And across the board, every insurance company I've talked to, the litigation rates are way down. So, it's a complicated issue. Certainly the statutory fee system that was put in place over, I believe, 100 years ago was a good system that was there to protect consumers. Unfortunately, there were a handful, a subset of attorneys that were abusing the system that got us to the situation that we're at now. but the market certainly has stabilized.
Food. The, sorry, I was just asking if they were out cooking the food. They're taking a really long time to set it up. Several of you touched on condominiums. In the aftermath of Champlain Towers, this is becoming a huge issue. As elected officials, we all hear from our taxpayers that they want the same thing, more services and lower taxes. And we're hearing at the condominiums that they're complaining they want more, they're complaining about how the property is being maintained. And they don't want to pay surcharges, and they can't afford insurance. This is tangential, but only on the insurance part of this. Do you have any suggestions on insurance for condos? Nobody. Okay. Well, I think that does not reflect well on our prospects. Paul?
Yeah, I'm happy to comment. The problem is there's been, for many, many, many years, these buildings have not been getting the reserves that they need to keep these properties to the condition that they are, and they've deteriorated. Unfortunately, the private market insurance companies look at those buildings, they have them evaluated by engineers, and if there's issues with the building, they're either not going to insure them, or if they are going to insure them, it's going to be super expensive. So I don't think there's any way around it. One of the things I'm seeing in Fort Lauderdale, they had an old co-op that was built in the 1950s. They're going to demolish it, and they're building an 18-story condominium, and each unit's going for $2.9 million. If you look at Florida, we have a beautiful state. Everybody wants to live here, even with hurricanes. So I think there really is an affordability issue. There's going to be folks who are not going to be able to afford the insurance. There are going to be folks who potentially are not going to be able to afford to live in Florida. But I think what's going to happen is there's going to be other folks who have the capital that are willing to come to the state, that are either going to, put in a new structure, a new building where that older condominium used to be. So that doesn't bode well for the people that are in there, maybe on fixed incomes or retirees. And maybe that there needs to be some public policy that's need-based that can protect certain vulnerable populations. But it's a very difficult issue.
Thank you. Congressman Hillary, and then we're going to break for lunch.
Yeah, I mean, listen, I understand exactly what Paul is saying. I mean, that's how the free market, of course, works. But I don't know that I can go to my constituents in any of these retirement communities and say, don't worry, when you die, this will get redeveloped. It's not.
I think you should try that. That'll make you really popular.
Yeah, I mean, I'll do that next time I walk into Kings Point. I mean, look, the problem is these buildings are older, right? A lot of these communities, Century Village, these are older communities. There's no, if you go to the villages up, north of Orlando, yeah, there's some new building up here, but down here in South Florida, these communities are older. They have they're older structures, and it's not that they haven't been maintained. They were just built a long time ago. And the people who live there are all on fixed incomes. So yes, now what they're doing is, in order to pay for the insurance, they're depleting their reserves in order to do that. But that game is going to run out for them. And they're not going to be able to go to the people that live there, who came here and retired with an understanding that we were providing them an affordable retirement. And so, the people who are moving into these places are not 85, right? They're in their late 60s. And so what are we going to tell them? We're going to tell them that, you're going to leave Century Village, you're going to leave Kings Point, you can't afford to live there. Well, who's going to come in? And so, I get the free market answer. I'm a free market guy, but in the condo space, in the retirement condo space, especially out west, not condos on the water, right, which people will buy that property for $50 million and build a nice tower. Out west, we don't have that redevelopment opportunity.
Thank you. Last one, Hillary.
Thank you. And I'm also a free market girl, but I think there's just some times where the free market can't fill the public need. And I think that's really what we're seeing. And we've got to start thinking outside of the box and getting creative. After Champlain Towers, we realized and recognized that the legislature really did a huge disservice. I think it was 10 or 12 years ago when they did away with the requirement that reserves be kept. I know when I represented the insurance companies, I did a lot of condominium work, and my bread and butter was going into these associations and going through years and years and years of records, looking at that lack of maintenance. So the work that we did in Tallahassee to implement that new reserve requirement is critical, but it's also creating this huge financial pressure because you've got the cost of insurance on the rise, and now we have this reserve requirement. I actually filed a piece of legislation this legislative session. Sadly, it did not go anywhere. But it would have created a pilot program for condominiums to create options for coverage. So for those condos that do have reserves in place and have the ability to pay for their roof replacement and those common elements, which we've required in legislation, they would qualify for an actual cash value policy. So we would be able to give them a reduction in their policy premium costs because they've proven that they have the money in the bank, and we're not asking them to double dip. So maybe the senator can help me get that moving next legislative session, because that would provide relief and reward those condos that do have the reserves in place and have that maintenance. But this will also get into really the solution that I, along with a Republican colleague, proposed, where we talk about Citizens, because Citizens is the primary insurer for condos, our largest risk. I think you also might see a lot of condos looking into risk retention groups. We know risk retention groups are available for those types of, trucking agencies and nursing homes where it's really difficult to get insurance and it's really costly, where they come together and band together with their resources and really create a self-insured or their own insurance fund. So we're going to probably start to see a lot of creative ideas. But our condo problem, our condo crisis is something I believe in Tallahassee we have not even begun to touch on.
All right. We're going to take a break for lunch now. Senator Garcia will be the first speaker when we get back. I'm going to ask the 5 panelists to please go first. So get up now. While I can still keep other people from speaking.
That is Senator Geller again.
Right. So I can still get other people from getting up. Go get your food. Okay. And as soon as they go, okay, now left side of the room, you can follow. You can go now.
The lunches, if you go out the double doors there, make a right. It's in the kitchen area back there. It's all boxed lunches. So grab what you would like and bring it on back.
Yeah,
it'll be
approximately 50% of that now is paid directly to reinsurance companies. Florida is what we call a file and use state, which means that your insurance has to be, before you can charge rates, you have to file them with the Department of Insurance, which has to approve them. If they take no action, they're automatically approved. However, that doesn't apply to reinsurance rates. Reinsurance rates, reinsurance companies can charge, whatever they want, basically. Whatever a reinsurance company charges is automatically approved. If they increase the rates by 30%, the insurance company can automatically increase their rates by 30%. Does anybody here want to guess who regulates reinsurance rates, the rates that reinsurance companies can charge?
Senator, could you just explain what reinsurance is for
I'm
those
sorry.
people that maybe don't
Right.
know?
Good point. Reinsurance is the insurance that insurance companies buy. If an insurance company is insuring $1 billion worth of risk, they will keep, I'm making up a number, $50 million worth of capital to pay off the daily claims. They'll pay off slip and fall, they'll pay off a fire, they'll pay off if a pipe breaks, they'll pay off theft, and maybe occasional wind, non-named storms, but they're not going to reserve enough to pay for a hurricane. So they're only going to have 50 million in cash to pay off their $1 billion worth of coverage. They will buy reinsurance to cover a certain amount beyond that. They are required under Florida law to insure up to a 1 in 100-year storm, but Florida law also requires them to keep certain rating companies happy. And in order to keep the largest rating company happy, that's a company called Demotech, they have to insure up to a 1 in 130-year storm, which is a very good segue as to where we get into this bill. Reinsurers' rates are regulated by the same people that regulate OPEC, meaning nobody. God is the only person that can regulate the rates. And if you look at the where they're national in scope, very few of them are American. Swiss Re, Hanover Re, Munich Re, Bermuda has a whole bunch of them. So you've got these reinsurance companies, which are completely unregulated, mostly not American, and they are worldwide in scope. If there is if there's a bad earthquake in Asia and they have to pay out a whole bunch of money, they will raise reinsurance rates in Florida. And do you know why they will do that? Because they can. Because nobody regulates their rates. They are not actuarially sound. Randy DeShazo, who is both the deputy director of the SFRPC and has a title something like Director of Research and Economic Development, when came across a paper that shows that they're actually charging 3 or 4 times actuarially sound rates. I understand why they're put their capital at risk. They're facing risk of ruin on a lot of things, but they're making on average boatloads of money. On average, they have a lot of good years and a few bad years. What the plan that Congressman Moskowitz has filed, that I had drafted for Congressman Christ, would simply say you won't have to insure up to a 1 in 130 year or 1 in 200 year, or State Farm, and I think many of the insurance companies insure up to 1 in 250 year storm. Let me explain what that is. A 1 in 50 year storm doesn't mean you're going to go 50 years without a hurricane. It means there's a 2% risk each year of getting hit with a hurricane that will cause that amount of damages. If it's a 1 in 100, that's a 1% risk. If it's 1 in 200, that's 0.5% risk. It's just the inverse of the risk. Florida has not been hit, we think, with a 1 in 50 year storm since the great hurricane of the 1920s. We don't know Hurricane Ian, which hit, was it last year or 2 years, a year and a half ago? We don't know if that'll exceed a 1 in 50 year storm because they're still paying claims. Most people think it will end up right at a 1 in 50 year storm, which would still be the worst. And remember, when I'm talking about this, we're only talking about what's covered by a regular Florida homeowners insurance policy. So when I'm talking about the amount of damages, we're not including flood damage because those aren't covered. We're not including commercial. The numbers are all over the place. You may see $100 billion storm, but of that, 50 billion is insured, and of that, 30 billion is 20 is flood, so 30 billion is insured, not flood, and 22 billion is residential insured, not flood. We're only talking here about the residential insured non-flood. What we're saying is that instead of having, and reinsurance says that 50% of the policy, if the insurance company only has to buy enough reinsurance from the cat fund, from the recently passed legislative wrap, which Representative Cassell can tell you about, plus what they're buying themselves to deal with a 1 in 50-year storm, then the federal government on those rare events, again, we haven't been hit by a 1 in 50-year storm in 100 years. So if we do get hit by a 1 in 75, a 1 in 100-year storm, the federal government would kick in, would issue bonds at T-bill rates because they can do that. And the states can't because we can't deficit fund. A 1 in 50-year event in Florida is predicted at 62.6 billion. A 1 in 130 is 82.2 billion. 1 in 250 is 93.9 billion. If they know that they only have to buy enough to cover the 62.6 billion and not the 93 billion, they can save about 50% on their reinsurance rates. Because remember, a lot of that middle is taken up by the cat fund, which will take up 17 billion at very low rates, and the wrap is 2 billion, and there's some other things in there. That means that the federal government, if they're, like I said, if we get hit with a 1 in 130-year storm, the federal government would have to float $19 billion of bonds at T-bill rates because they'd be insured by the full faith and credit of the United States government. That money would go to the insurance commissioner of Florida. The insurance commissioner of Florida would use that money to go to the insurance companies to pay off their claims. Insurance companies will no longer face risk of ruin. They know if they have enough to insure 1 in 50, that's all they have to buy. Federal government will guarantee anything beyond that. The federal government issues, let's say, $20 billion in bonds at T-bill rates that would be passed on by an assessment in Florida, if Florida's a state needing it, pay off over 10 years. And the necessary assessment, according to our calculations, for most storms would be between 1 and 2%. For a 1 in 250-year storm, maybe it'd be 2.5 or 3%. In exchange for the chance of getting a 1 or 2% assessment on something that is not likely going to occur in the lifetime of most anybody in this room, I see a couple of young people, but most likely not going to occur in the lifetime of anything in this room, you get an immediate 25% reduction on your insurance policy. And if it does occur and there is a 2% surcharge, then you're only saving 25 minus 2, you're only saving 23%. That's basically what Congressman Moskowitz's bill does. Representative Cassell, would you like to discuss your bill? And then after that, we'll take questions on them. Thank you.
Happily. So the bill that I filed along with a Republican colleague of mine by the name of Spencer Roach is basically creating a citizens wind-only policy throughout the state. So we've already talked a lot about Citizens and the concept that it was created to be the insurer of last resort. But if you look historically at Citizens, that's just never been our reality. And it was originally created with the Joint Underwriting Association, where we were really only insuring wind coastal properties. But I'm a big believer that, you know, as I've already mentioned, sometimes that private marketplace doesn't meet the public need. And we in Florida are doing things a little bit crazy. It's insanity to continue to do the same thing over and over and over again and think you're going to get a different result. And really what we're doing right now with the reforms that have passed, and again, as I mentioned, the carriers that are coming to the state, we are creating the same problem. And in 20 years, we will be having the same conversation about insolvencies of insurance companies that come to the state that are undercapitalized, rely heavily on this global reinsurance market that raises prices when there's a fire in Maui and an earthquake in Asia, and we bear the brunt of that with no regulation and no ability to regulate and control those prices, which obviously is something that is crucial to consumers. So I wish I could say I'm the genius behind this legislation, but the reality is it's been a concept that's been discussed, for at least since 2006. And I think Floridians would want to protect Floridians and bail out their neighbor before they bail out an insurance company executive. And that's really what this bill does. So what the bill does is says, citizens, you go back to a wind-only model like we see in Monroe County, that over every single year for 22 years has a $50 million profit in Monroe County. So we know that it works. We also know we would not be the first state to do this. Texas has an earthquake program. California has an earthquake program. Texas has a similar program, but it is only for the coast. But we have almost 70 years of data from those two states on what we can do right and what we can do wrong. And what we know is by creating a wind-only program with citizens where every policyholder has wind, what are we doing? We're spreading the risk. One of the biggest problems and concerns that we face currently with citizens' makeup is, as I mentioned, yes, we have companies coming in and doing takeout policies, but they're taking out the most attractive properties and leaving us and leaving Floridians with the risk of the biggest failures in zip codes that are more subject to these high catastrophic losses. But if we spread that risk across the state, when we talk about potential assessments for those big storms, we're talking about areas of the state that don't have that high risk that we do. So in Miami-Dade, Monroe, Palm Beach, Treasure Coast, along the coast. So it's a concept that's been around for a long time. It was something that was discussed during the 2006 legislative session. It was a recommendation after the Governor Christ, I believe it was Governor Christ at the time. I could be wrong about that. But they put together an insurance commission, and it was one of the reforms that was talked about. And basically what would happen is it's basically a premium collection. We pay into a fund, you get insurance, and if we have a good year, that fund continues to grow. And had we started this in 2006, remember, we went almost 12 years in the state without a hurricane. We would have gone from 2006 to 2015, just continuing to invest in a fund that would have been available to pay out claims after that. And we know that we are on sort of the precipice of, not probably going to see in our futures many years without storms, right? We know these storms are getting faster. We know that I believe climate change exists. We know that our oceans are getting warmer, and we're seeing storms that are stronger, faster, carrying more water and causing more damage. So now is the time. If we are going to implement a program like this, now is the time to do it, because hopefully we will have some years without a storm where really the program just continues to bank these premiums and is there. And as I mentioned, the concept is, private carriers like Stacy's company would come in, they would write the all other peril aspect of it. They would cover your water damage claims, your fires, your lightning strikes, everything else that policy covers. And we take away from them the risk. Also, because Citizens is backed by the state, they're not going to have to buy the reinsurance, or they get reinsurance at a much lower cost because these reinsurance companies know that the state of Florida has the ability to pay. So it's a concept that thankfully I'm thankful that Speaker Renner sees some had some interest in presenting a workshop. We were able to present a workshop before the Banking and Insurance Committee in Tallahassee this legislative session, where we could have a conversation about really starting to think differently. Again, all we're doing right now is patting ourselves on the back for, inviting these new insurance companies into the state of Florida that don't have the accountability that they once had, because we've created so many legislative reforms that in my opinion, to some extent, were pretty anti-consumer. But in addition to that, we are inviting those same companies that are undercapitalized, rely heavily on that reinsurance market that continues to drive up costs for consumers while also being rated by an individual rating agency that is not rated like an AM Best or a Weiss rating agency that really tells consumers whether these companies are going to have the ability to stay solvent or not. So again, as I said, I wish I could take credit for it. It's been something that's been around, but now's the time to act. You know, we've got to be forward thinking. We know we're going to run into a situation where these storms are just going to continue to come. And if we can continue to invest in Florida and Florida rely on Florida and stop relying on global reinsurance markets to save the day and the federal government to save the day, I know personally I'd rather know that if an assessment came, I'm bailing out my neighbor and not bailing out an insurance company executive.
And Representative Cassell, Governor Christ was elected November of 2006. What you're referring to is a special session called in January of 2007. And I know because Jeff Atwater, that Senator Atwater wrote the citizens portion of that bill, and I wrote the rest of the bill. So I'm very familiar with that. Are you familiar with former Senator Brandis's suggestion on lowering the attachment point? And if so, can you describe that?
Yeah, absolutely. That was something that, so Paul Handerhan and I, who's obviously no longer here, is a dear friend of mine. I served on the board of
Actually,
the federal.
Paul is still there, but he's turned invisible. Okay, no.
But,
Okay, go ahead.
you know, I served on the board of the Federal Association of Insurance Reform, and that was one of the reforms that we had talked about for years. So when we talk about reinsurance and we talk about the CAT fund is state reinsurance, right? But you as an insurance company only have the ability to access it at a certain attachment point. So the way I like to talk about it, we've all seen those fundraising goals, right? So an insurance company says, and just to use an easy number, I have $10 million to pay out my claims, but like an airline, I have oversold my risk. I have actually written $20 million in policy. I only have $10 million in the bank to cover it. I need to have reinsurance to cover the remainder of that. So what happens is when you think of that fundraising goal, they hit that 10 million. They fill that bubble, the insurance company does, with the money that they have. They then have to go fundraise out in the private marketplace to get reinsurance to cover the rest of their liabilities up into the attachment point of the CAT fund. Well, the CAT fund, because the CAT fund has been such a successful model, continues to make money, for a lack of better word. They are
Reserves.
They have money in reserves. That money is available, and the concept of the CAT fund was it should be there for a rainy day. It should be there for a time of crisis. It shouldn't be so unobtainable that we can't ever get access to it. Well, that's exactly what's happening. The attachment point of that CAT fund continues to raise. Back after the 2004-2005 storms, then Governor Christ made the decision to lower the attachment point, I believe, around to the 4, along with Senator Geller, but around the $4 billion mark. And it's currently at the 17. So by lowering that attachment point, what that does when you think of that fundraising thermometer is now, as a private insurance company, when I go out to the private marketplace, I only have to fill that fundraising gap a much smaller amount, because now the CAT fund is going to kick in at a much lower attachment point. And that is a much lower cost for the insurance companies, because they're only having to buy private reinsurance at a much smaller piece of their pie, so to speak. And it also gives reinsurers some comfort, because they know, oh, wow, I don't have to fill that whole fundraising thermometer till they get to the attachment point. My risk is much lower. I can potentially lower my rates as a reinsurance company, because I'm not going to be on the hook for that large amount of money. So the lowering of the CAT fund attachment point is something that I think would go a long way to give insurance companies some relief. And what's important about that for consumers, because at the end of the day, it's all about our constituents and it's all about Floridians. That is the only place in statute where we mandate to insurance companies, if you save money on the cost of reinsurance, that has to be given back to the consumer. That has to be reflected back in a premium reduction. So if we save them costs in taxes, or we save them costs elsewhere, There isn't any mandate that that be given back to the consumer. Where consumers see an automatic drop in their price, in their premium, is when they save money on reinsurance. So by lowering that attachment point, we save insurance companies money on the cost of their reinsurance, which directly benefits consumers.
By the way, I happen to support that also, but the argument that the insurance commissioner and others have made against that is they don't want to make it easier to attach the cat fund because they want the assets to continue to build for the really, really, really bad storm. So that is the trade-off, although I think it does make sense to do.
Well, and my response to that is we're in a really bad storm right now. It might not be raining outside, but consumers are in trouble and need relief. And the thought process behind the cat fund was it should have been a fluid model versus this stagnant, continue to raise and get further and further away, because then it provides no relief. And at the end of the day, it's our money. We pay into the cat fund when we pay our insurance premium. So you're really holding on to taxpayer dollars at a time where we could be lowering people's premiums.
Let me ask if either Stacy or if Mel have any comment on either the National Cat Fund program that was discussed, Representative Cassell's wind-only program that was discussed, Senator Brandis's program that was discussed. And by the way, before I get to that, Representative Cassell, what we did in 2006, and I forget the jargon, one was a TICO and the other was the TICO, TECO and TICO. I don't remember which was which, but one, we added a lower cost right below the cat fund, and then the second one was reinsurance up the side of it. So if the attachment point at the time was 4 billion, we put in $1.5 billion to take it down. I'm making up these numbers. It was 20 years ago, from 4,000 to 2.5, 4 billion to 2.5 billion. But then starting at 4 billion, we would add additional that we'd have 20% co-insurance for 80% that they were doing. So one was the TICO, one was the TICO. I don't remember which was which, but that's what we did. We, in order to reduce rates, we put in that thing at the bottom. I will tell you, it ended up not reducing rates at all, only because the insurance companies raised their right hand and swore to me that if we did this, rates would go down by 14%. And then they came in and filed for an 8% rate increase. And we said, you promised us a 14% cut. And they said, yeah, we would have come in for a 22% increase. So you've reduced, now we're only asking for 8% because, you know, you've reduced it by 14%. So we need to be careful that that doesn't happen. So Mel or Stacy, can you comment on it? And Senator, thank you for being here. I know you have to go to Jacksonville. We really appreciate your being here, ma'am.
We all have to work together to find the appropriate, and I apologize for having to leave, but it's a very long drive.
We understand, ma'am. Thank you for being here. And you have my cell phone. Okay, I'm sorry.
Thank you, Chair. Yes.
Representative Galante.
Yeah, representative, not a representative, representative of some. I don't want to speak too long, but I would just say a couple of things. One is that personally, this is just me personally, I would prefer a national program over a state program. Only because I get nervous. It's, you know, citizens said yesterday, or the CAT fund, it was the state of Florida has over 3.3 trillion in exposure. Just as a resident, I've lived here since the 70s. It makes me nervous that we would be on the hook for that kind of money. And, you know, we're all in this boat together, and the people in the boat shouldn't be insuring the boat. We should get people from the outside, which is why I would prefer to,
I like that.
you know, see a national solution. Although I think Representative Cassell's, you know, plan is certainly well thought out, and there's certainly definitely need more study and more actuarial work, as well as looking at it economically, the national plan, because, we're not against that. We just want to make sure that it works mathematically. I would say that by lowering the attachment point, so by basically having insurance companies have,
And that's Senator Brandis's bill.
correct, the Senator Brandis's bill, if you lower the attachment point, you immediately lower the cost of reinsurance, because the reinsurance at the bottom of those levels is ridiculously expensive. And let me say this really in English. If you, at the bottom of your reinsurance tower, if I want to go buy $20 million of reinsurance coverage at the bottom, that's probably going to cost me 10 or 11 million for $20 million in coverage. So the first 10 million that I'm spending is my own money. But that's how it works. It's that expensive because when the actuaries run the numbers, they get hit once every 3 years on average. And so the only way they can keep coming into this market is by charging those kinds of rates at the bottom. So if the state will basically subsidize and or provide more coverage down below, that's less that we have to buy from the reinsurance companies, and that saves money, which we can pass on. Sometimes we pass on the savings, but inflation goes up or cost of construction goes up. And so even though we saved 10%, those other expenses went up 12%. So we've got to ask for a 2% increase. I mean, that's just the way the economics works. I mean, it would have been much more had we not been able to achieve those savings. So I do like that kind of plan. I certainly think the national plan that you've put forward is something that should absolutely be looked at. Same with the state plan, just so we have a better idea of the numbers and really how it would work pre and post catastrophe.
Thank you. And Stacy, you have now the economic analysis. If you want to
Understood.
have your people look
Yes.
at that, it's carefully footnoted, and all assumptions are carefully detailed.
Yes, sir.
Mel, did you have any comments?
I guess the national plan is an incredible idea, and as we had talked about earlier, it's something that has been floated for years, going back to Commissioner McCarty when he was heading up the NAIC. That was one of his driving forces, was to set up a Nat Cat program. So I just think that with everything going on in Washington, trying to put a Nat Cat program together, you're definitely rowing against the tide. Again, that's just my opinion. I think if we keep it local, if we keep it to the state of Florida, I think it's much more doable than it is on a national basis. And, I realize that, we're all rowing in the same boat, but some of us are paying a huge amount of premium to citizens today. And as the representative said, we have been very profitable in Monroe County. We have continued to be profitable in Monroe County. So we have proven that writing a wind-only policy works. And it's the reason why Citizens, or the FWUA, was created in the first place. So I think keeping it to a local level, I mean, even to the point, if you think about it, you could go out and buy facultative reinsurance on every single policy that is written through this facility, right? And I'm sorry, facultative reinsurance is reinsurance on every single individual policy, not on a program basis or anything like that. So people could actually see the cost to insure my home is X plus Y with the reinsurance, coming out to the end. They're getting surcharged today. If you look at your wind policy today, you are receiving a surcharge for the Florida Hurricane Cat Fund. It's there. You are paying for it today on an individual policy. So I think having a state program as opposed to a federal program would be great. But I don't know that we're going to get there.
Let me, when I was national president of the National Conference of Insurance Legislators at the same time that Kevin McCarty was president of NAIC, and we tried together on this. And at the time, the difference, we had not yet figured out how to make the plan free of cost to Treasury. And when we went and tried to pass it, states, Nebraska, Iowa, Missouri, all of whom are benefiting from Florida's payments for the federal flood insurance program, they all said, well, Why should our taxpayers pay to bail out, millionaires living on Florida coast? It was, they had it wrong. They did, but the difference now and then is, first of all, we did figure out how to make it free so that it will not cost the Treasury any money. They're just co-signing our note and floating bonds that they're guaranteed repayment on. And secondly, as Congressman Moskowitz said, he referred to Florida as the tip of the spear. I refer to it as the canary in the coal mine. Either way, what's happening in Florida 10 years ago is now spreading to the rest of the country. Everybody knows the entire Atlantic seaboard, except for Georgia because it juts in, and the entire Gulf Coast are subject to hurricanes. The West Coast, subject to wildfire. If you're in the Pacific Northwest, volcano. You have an F5 tornado would wipe out Chicago. I mean, it's now national in nature. So we are hoping that is the difference.
Just to kind of reiterate your point, and I realize this isn't a discussion about FEMA and flood. Florida has 27% of all policies in the National Flood Insurance Program. We are a donor state to the program. So
The only major
your-
donor
Your,
state.
your point is very valid. We are subsidizing, which is kind of ironic, all of those other states that have flood losses with no flood policy in place.
At this point in time, we have about 15 minutes left, and I'd like to turn it over to members. I have first Chairman Smith, then Senator Garcia, and then Vice Mayor Marino. And if there's other people, please let me know. Chairman Smith?
Thank you, Mr. Chair. So to that prior comment, when we went through the flood insurance thing with the Association of Counties probably 6-7 years ago, the numbers were amazing of how much Florida funds the rest of the country. And there's a whole bunch of reasons why that exists, from our requirements of our banking industry and how insurance and how everything else is handled. But when we went to Congress and we shared that with them, within a month, the Bigger Waters bill got pulled back and was amended and dealt with. And Monroe County was the major, well, I say Pasco, Monroe, but you had a commissioner there years ago that was incredibly good with all this. And that leads me to either a question or maybe it'll come up in our conversation with the next item. But what always impresses me about where we are in the state of Florida today is that we are the third largest state in the country. Our delegation, if we were all in lockstep in unison on our want, should absolutely be in a position to move anything. And I think that is our challenge as these two regional planning councils coming together when we look at what our priorities need to be and what we want to support for the 6.9 million, 7 million people that we represent. I think that is the opportunity. And I am confident that if we can get the story told, the idea told, whoever idea it is, it doesn't matter to me. And I am one that never looks to see, I don't care where the idea comes from. If we can get people on board with the idea that here are 3 things that we can do that will dramatically change the direction of the state of Florida, and we can get Congress and we can get a unanimous support level from our state, we should be able to move anything. And so I don't know what you all think about that. You don't have to necessarily answer because we're going to go into that part with our legislative update and so on. But I just, as you were all discussing this, I'm thinking about if it couldn't get done 20 years ago or 30 years ago, it certainly today ought to be able to get done.
And again, federal, one of the reasons Congressman Moskowitz is the ideal person to have filed that. He plays well with others. I mean, he's a strong Democrat, but works on legislation with Republicans and is a good I have a lot of faith in him. Representative Cassell.
Yeah, and I was just going to add to that from the state perspective, we're starting to see, and people are really realizing in Tallahassee that this is just this is a bipartisan, non-political issue. At the end of the day, a hurricane hits you, whether you're a Republican, Democrat, Independent, not a voter. And that's why it was really important for me to reach across the aisle with that legislation. And it was filed by myself and a Republican colleague And every conversation we have, we mention the other because it's really important for us to say that there are just some issues that politics need to get out of it, and partisanship needs to come out of it. And this is really it. You know, it impacts every single Floridian, and it impacts us from an affordability standpoint. You know, whether you're a homeowner or not, it affects you if you're a renter. You know, that bill is being passed down to you. So this doesn't just affect home ownership or the potential for home ownership. It impacts so many and permeates so many different parts of things that are really hurting Floridians. So that was why it was really important for me, you know, being known as the, you know, sort of property insurance expert in the legislature. I wanted to work across the aisle and make sure that the people of Florida knew we were trying to work on this issue and find a solution, regardless of party affiliation.
Thank you. Senator Garcia, followed by, is it Vice Mayor? Vice Mayor Marino, and are there any other speakers? Commissioner Woodward, we have about 10 minutes left. Okay, I don't see anyone else right now. Senator Garcia, you're recognized, sir.
Thank you, Mr. Chairman, and I want to thank everyone for coming together, and I appreciate this conversation. There's no one pressing issue than this that affects our community, and I think what happened 20 years ago was just us. It was the southeast of Florida that it was really affecting, and it was so hard to get the West Coast and the Panhandle and others to understand this is not just a southeast Florida issue. This is something that impacts us all. And unfortunately, you know, I don't pretend to be an expert in insurance. I'll talk about healthcare all you want till you're blue in your face, but insurance, the problem you have with insurance when you talk to voters is that people get a glazed look in their eyes. When you talk about all these issues that we're talking about here, extremely important, but only a handful of people understand what it is. So this is why you see it, the consumer only looks for the price. When you start trying to give all these explanations, they don't have the time. This is why it's up to us policymakers to try to come up with solutions. And I agree with Congressman Moskowitz, you know, and I do agree with him. I fall somewhere in the middle here, but a lot of these regulatory schemes that we have done in Tallahassee, while we use the issue of free market is only a soundbite. It's only a talking point, because if it was free market, if it was really a free market industry exercise here, then none of us would be insured. Because we'll pick the insurance companies to get out of Florida and say, we're not going to insure anyone in Florida. That's why we have to regulate the industry. So it's not bad to say that we're trying to regulate it to make sure we give something to our constituents. And for the last 20 years, I was talking to David. David has been working with us for the same time. He used to work with Rudy Garcia when you were in the Senate.
Senator Garcia,
Gail Harrell,
good friend.
Moskowitz, all of us have come together. But the problem is that we have given, consumers have given up. The attorneys have given up, but I don't know what the insurance industry has really given up. And every time I hear these issues that we've taken all this money out of of citizens and we've done all these things, we have new players coming in. Has any of your insurance rate has gone down? Any of the lines? From your auto insurance to homeowners insurance to whatever it is? None of us have seen a decrease in insurance rates. So this, I think right now is a point where this group of people that we have before us now, Republicans or Democrats, this is the time. And I think we recognize that here, that this is the time, at least for the Southeast, for us to come together and put the pressure on a legislative delegation. Republicans, Democrats, we have to come up with 1, 2, 3 things that we want. And our delegation has to respond, because there's not one time that all of us here elected officials have gone on the radio, have gone on the TV, have gone to any community event that we're not asked about insurance. So maybe,
Right.
Mr. Chairman, I appreciate what we're trying to do here, but this is critical. And I thank you, Representative, because like I told you earlier, a lot of these issues, we get glazed over. I'm one of those. But what you've been able to do here in a short amount of time, I've been very attentive because I was following everything you were saying. I think you need to get out there more often and get out there for the public to understand, because it was very clear and concise. Not bad for a Democrat. I shouldn't say it up here.
Right.
But thank you. But I think really, this is not, like you said, it's not really a Republican or Democrat issue, Mr. Chairman.
No.
And you have been doing so much work on this for so many years, and I think this might be the time. This has to be the time that we try to bring some real relief to our constituents. So thank you, Mr. Chairman.
Senator Garcia, how many years were you in the legislature?
Sorry?
How many years? 16, I think?
Yeah, 16, about 18 in total, yeah.
Yeah, so you understand this, you're not the average bear. And by the way, Mr. Galante, when we finish, we'll give you a 3 or 4 minute head start before the angry mob starts
Yeah, he's
chasing.
done a good job. He did a good job.
No, we like you. Palm Beach County Vice Mayor, Maria Marino.
Thank you. I was at a chamber event this week and the Florida Chamber president led with Florida has 1/3 of the world's insured hurricane risk. That kind of made me quake in my boots. Comments and questions. We talked earlier about all of those condos along the coastline. You know, we have 47 miles of coastline right here in Palm Beach County. And in the north end of the county, we have several condominium buildings that are being purchased. They are literally one by one picking off the owners and purchasing the building and tearing them down. And it's sort of easy pickings because between not being able to get insurance and then not, you know, building codes and risk in the buildings, they can't afford to fund their reserves. So I think we will, as a state, we're going to start seeing a lot more of that. And the developers will make money. The owners, if they're legacy owners, if they are fixed income owners, they're going to get whole lot more for their condo than they ever thought they were going to get. It's just hard to find another place to go and live now. But my question is this: I actually got my insurance. It went up. It doubled. I called the insurance company. That the first comment was, yes, you can have more risk on yourself if you'd like. I said to him, why is the personal property portion of my insurance so high? And basically, I think there's a formula for that, 50%, correct? And I looked at my policy and I went, I do not have this much personal property in my home. I probably have 1/10 of this. So why should I pay for that? And then ended up having an entire conversation and was able to lower that deductible, lower that amount, I should say, and
coverage.
saved that coverage and saved about $3,000 on my insurance. Why is that not? That's like, to me, that's low hanging fruit. Why isn't that spoken about more often?
If I could answer that, we don't sell directly. For instance, Florida Peninsula and Edison, those are agents. Those are independent agents. They're not employed by us, and we operate through 2,500 or 3,000 agents who also write other domestic and international and national companies. So that's a great question, and that's really for the agents to do a lot more. I mean, that's their job. They're getting 10 or 12% of every premium dollar goes to your agent. Big fan of agents. We have 2,500 of them, but it's important to understand that it's not always something easy, that they're a kind of conversation that they want to have. And some people end up having more personal property than they think they have. And if a loss occurs and you're an agent, you say, well, lower it from, the 50%, which is standard, to 20%. So you have a $300,000 house. And so what that would be $60,000, and you lower it to $30,000. So you only have, all of a sudden you have a loss and you realize I have a lot more than $30,000 when you go to buy things new, especially if you have a replacement cost policy, because you can choose between replacement cost, which is, old for new. So if your computer gets destroyed, you get a brand new computer. Well, that's a bad example because those keep getting cheaper. But, your rugs, your carpeting, your flooring goes up, and you could get, brand new items as opposed to the used value of it. So it's a great point, and we should do more education with our agents so that they go out and talk to people about that, because it is a way to save money if you're willing to take on that personal risk.
And I did, because I went through room by room and said, well, I only pay for like $5,000 worth of stuff in this room, and there's less than 5 in this room. And also the question was, well, if the car is in my garage and that gets destroyed because of a hurricane event, who covers the garage? Who covers the car? And they said, well, that would be your auto policy.
Right.
So, I mean, for most of us, one of the biggest investments other than our house, is our car. And if your car's in the garage, it's covered by your auto policy. You don't have to worry about it on this policy. So it was educating. It was educational for me, and I just wanted to share that.
Thank you. And we have time for one last question. I'm sorry. I
just wanted to say, one of the things that we saw with Ian, and getting back to your comment about your car, there were a lot of people that had electric cars inside their garage. What they didn't know, and I didn't know it actually either until I read the news, Once that salt water hit those batteries,
Boom.
flames and no way to put it out. So that's a further complicated question as to who's responsible for burning the house down.
All right. Okay, we're supposed to be taking our break right now, but I did tell Councilmember Woodward or Commissioner Woodward? Commissioner Woodward.
yeah.
So Commissioner Woodward will have the last question.
I'll make it quick. I just had I like the idea of the citizens, being wind only. If I can help push that along and educate people, because I get this question a lot. And honestly, this was a great education for me, explaining all of this. I don't understand most of it and I can't help others. I can't even help myself with this. We completely hardened our home to a Class A rating and our insurance went up because the house was worth more. So that was fun to find out. I was wondering, is there any option that is out there for people who do harden their homes, even though the value does go up? There should be some sort of benefit if you do everything to hurricane proof your home into a fort. But the question I wanted to know was the citizens, how you have it as like a statewide kind of bucket that we would all put into. Is there some sort of a similar option that could be put forth for our condo buildings, for some sort of pocket that would just be for our condo owners and associations, a similar, I don't know exactly what to call this, but you know what I'm saying.
Yeah, so there's actually it's called risk retention groups. They are regulated federally and they are really organizations that come together that have a difficult time getting insurance, or the cost of insurance just would put them out of business. So think of trucking industry, right? So trucking industry, there's a lot of danger on the roads, people fall asleep, there's high risk in that. So to be a small mom and pop trucking company, to get actual auto insurance from a commercial auto insurer just is so unaffordable that you wouldn't be able to operate a business. So risk retention groups have been around for well over 30 years. They're regulated federally with regards to how you can incorporate one and become one. But I think that's something we're going to see some of our associations start to look into, because it's really more of like a self-funding, where you are your own insurance company. And there's regulations and there's rules that you have to comply with, but you're not looking to a private insurance company that's got to deal with claim assessment. But the thought process behind it is when these RRGs come together, and they can be multiple associations that come together, you have an interest in the outcome. So you don't see a lot of litigation. You don't see a lot of bad claims handling, because the risk retention group is only as strong as how many members it has. So if you're a risk retention group and you're not taking care of your unit owner, or you're not taking care of the association, you're going to fall out of the risk retention group, and then your available, bucket reduces. So you're going to want to take care of it. So RRGs, I think, are going to be something that associations start to look into, to really, it's almost like a self-insurance program. But again, federally regulated, and we're limited in what we can do. We're preempted in how we can regulate them from a state perspective. But I think it's a concept that if for those groups that want to start thinking outside of the box, there's a model already available for those that can afford to do it.
Just real quick to close, Florida Statute 718, which governs condominium associations, there is language in there to create self-insurance pools for 3 associations or more. Now, I will tell you, if you go to the Office of Insurance Regulation and ask them, how many of those have you approved? 0, because they must approve those in order to move forward.
All right.
But I will say, at the end of this legislative session, that became a topic of conversation that I was having with several colleagues. We saw an amendment dealing with nursing homes, because nursing homes is one of those agencies that has a difficult time getting insurance, and the cost of insurance is so high. So we did see some legislation this year. I've started to have those conversations to, work with OIR and starting to approve them with certain regulations here in Florida.